Thank you, and welcome back to everyone. Early in the 20th century, W.E.B. Du Bois postulated that the key for black people to gain equality in America was through economic means. Although race was a major factor, it was apparent that all things being considered, wealth was the great equalizer in the world society. Unfortunately, developing generational wealth was stunted by a lack of access to resources, to education, and in some cases was outlawed by legislation. Seems like that's coming back. This left many black families doing their best just to survive, or fighting to build in a system that was not designed for their benefit. Historical events such as Tulsa and Rosewood contributed significantly to the curtailing of generational wealth as a priority. Fighting to obtain and maintain civil and voting rights must remain as matters of key importance. But the key to moving ahead in 21st century will be developing and protecting generational black wealth. Today, we are joined in a discussion of the methods by which we will restore the legacy of black wealth in America. I welcome Donna Gambrell, who is the president and CEO of Appalachian Community Capital. I welcome Andrew Moss, Director for Minority Outreach, Office of the Comptroller of the Currency, and Mitchell Doyle, President and CEO of our very own Industrial Bank. Welcome all.
Thank you.
So I'm gonna get started, but I just say this. I want everybody to really read the bios of these folks and all of our speakers. You will absolutely be amazed and impressed and also extremely proud. To those of us in banking and finance, you guys are legacies. You guys are giants and heroes. So as a third generation founder of a black-owned bank, a black woman executive formerly in the US Treasury, who would think? And the driver of diversity in the office and the OCC. How did y'all get here?
Well, I got here because of Donna. So Donna and I sat on panels before, and she recruited me and said, hey, come to the government, and recruited me, and been working with her for a long time. Then she retired on me, and I had to make my own way. So
And I failed at retirement. So
You failed miserably.
Here I am working again, but loving it, yeah. And
How
I
did you-
started out on the bank regulatory side. I actually worked for the Federal Deposit Insurance Corporation doing a lot of consumer protection, Community Reinvestment Act work, fair housing, and fell in love with these community development financial institutions when I went down to Louisiana after Hurricane Katrina and have been captured ever since.
All right, third generation.
Well, everybody thought when I was born and grew up that I would be a banker. And my mother actually came from a family of musicians. So I kind of veered to the right a little bit. But when I saw how the bank was actually helping people and we could make a profit, we could do well by doing good, I decided to take the road into banking and started very young working in the bank and worked my way up.
Well, we're all glad that you took the journey that you did. So let's go on another journey. There could be lots of factors as to why black wealth has not been preserved. One factor, I know you guys could do a dissertation, but give me one factor that you think is hindering us the most in terms of the black community being able to accumulate and protect and hold on to wealth.
I'll start us off. I think one of the biggest challenges beyond what's happening with...
His is working.
Oh, mine. Okay, sorry. I think one of the biggest challenges that I see today is really targeted consumerism. While we know that there's a lack of wealth that has been accumulated and preserved in the community, but we're also seeing additional wealth go out because of so many consumer activities where we want the community to purchase and buy and continue to overspend when we need to really keep some of that money and reinvest it in our communities.
So for me, Kimberly, and I think Doyle and Andrew would agree, we have lived in a country that has seen public policies that have almost from inception been ones that have put people who are already vulnerable in even more vulnerable positions. African Americans who could not, for example, buy homes. The GI Bill that restricted, in fact, prohibited, not even restricted, returning soldiers from coming back and purchasing homes or, pursuing their education. When you start off at point zero and there's no way up to move up, there's no surprise that those policies have continued, even as they've changed over the years. There are still legacy policies that are really marginalizing, keeping our communities very much oppressed and very economically disadvantaged in terms of our ability to move up and really enter and ascend into the financial mainstream.
Oh, we're going to come back to those policies, so put that pin in that one.
Well, I would agree with everything that's been said heretofore, but I would think also 100 years ago we probably had more businesses per capita than we do now, and that was all by design. Many of the businesses were just simply destroyed, and then policies that kept us out of credit markets just exacerbated that situation. But now I think there's a growing consciousness about us supporting Black-owned businesses. We spend $1.3 trillion, $1.4 trillion. It would make us the 15th or 16th largest country on the planet, and but we only spend 3% of our spending power with Black-owned businesses, and we've got to change that. Maggie Anderson wrote a book a while back, and Kellogg Business School ran the numbers, and they said if we go from just 3% to 10%, we'd create 1 million new jobs for African Americans, almost overnight. And so we've got to be conscious about that every day. I think we really have the key to our own destiny in our own hand.
Can we get to, you guys talk about being the consciousness and what's really going on and the policies. Talk more about what it means for us to level up our consciousness and understanding why we really are where we are. You talk about businesses, you talk about us being, having the consumer power that we have, and yet we're struggling.
During slavery, we had a number done on us. We really did. But coming out of slavery, I think there was the knowledge that we had to have our own, starting in the Black church. And out of the Black church came Black savings clubs, savings and building loan associations, and therefore the Black bank came right out of the church, because we knew we had to pull together our resources, we had to support one another. And desegregation kind of went against that, because we could now go anywhere, and unfortunately we did. We did go in, and we spent our money elsewhere. And I think that was, along with a lot of the policy, either policy changes or new policies that were implemented, along with us spending our money outside of our own community, it did a lot of damage.
So now here we sit, person with OCC who I know can't really speak about the CRA, but y'all can.
It's an open rule-making period, and
Right.
we're still developing the final rules, so we can't talk about it.
So let's talk about policies. Let's talk about where we're going with the CRA. Let's talk about where we're going with MBDA or the SBA or other Treasury policies. What's on the horizon that, and even if we need to go back a little to make us conscious of what happened, and now what do we need to know? What is the consciousness that we need to have now to advocate with our Congress folks or whomever? Where do we go from here?
I think that's a great question, Kimberly. And I'll talk specifically about the Community Reinvestment Act, even though I know Andrew can't say everything that he probably wants to say about it. But when we started with the Community Reinvestment Act, people have to remember that that was to address a lot of the redlining that was happening in neighborhoods across this country. again, lines being drawn around specific neighborhoods. And CRA was intended to address those disparities that were happening in the neighborhood, except that it was missing a couple of key ingredients in my mind. And I've certainly worked in federal agencies long enough, I think that I can step back and say that there was not a recognition, while there was certainly a recognition that low-income communities were being adversely impacted by redlining. What was missing was the recognition that these were oftentimes African American communities, Latino communities, immigrant communities, communities of color, and because there was not a recognition that there was institutional racism built in to a lot of what was happening in these neighborhoods, CRA, while it could have been a powerful tool, lost some of its teeth, I think, because of that. I would love to see in this new proposal, the new rules that come out, I'd love to see, and I've said it publicly, that there is a recognition that we also have to look at race and what the kind of lending practices that we have in place, and what more banks can do to address the inequities in those neighborhoods that are, again, very racially, either racially diverse or that are predominantly African American and black and brown communities.
Policies for the Black Bank.
Well, I'm a banker, so I have two views on this. One from the banking side, one from the community side. From the banking side, I can't figure out for the life of me why a bank like ours has to comply with CRA. I mean, we were formed because of those kinds of practices upheld by other institutions. So, and it takes a lot of money for us to comply. We spend well over $1 million complying with all rules and policies. So, from the community standpoint, yes, you've got to have something that requires people to lend fairly to those that qualify. Now, how that comes out in the secret sauce, I don't know. It's very expensive for us to comply with CRA, but without it, then there would be, we would probably be where we were in the 70s, with respect to lending and credit. So I view it differently. The one recommendation I would make is we have to comply with CRA. We are a CDFI, so we have to comply with those rules. And now we have ESIP funding, and so we have to comply with those rules. None of them talk to each other very well. So, for example, a loan in this community, at this address, may qualify for CRA, but it may not qualify for CDFI, and vice versa. Or a loan a mile from the first one may have some discrepancy. So, I would love to see the federal government, let's have one rule for all of these things, and not just one rule, but loans that qualify. If it qualifies for one program, it should qualify for all the programs, and that would just make record keeping easy for us.
I do hear you.
Well,
Oh, go ahead.
I'm sorry, Kimberly, but you made an important distinction, I think, because Industrial Bank is a community development financial institution, or a CDFI, and even to this day, people don't understand or know what a CDFI is.
True.
So that CDFI, the mission is, the core mission is to support low and moderate income communities, distressed communities, marginalized communities. So he already has, within his bank's mission as a CDFI, a commitment to do that. And that's very different, I think, even from traditional banks that we see. I think those CDFI banks are very much core focused, very mission focused in terms of looking at ways in which they can provide affordable capital to underserved markets as
So
well.
what I hear you saying is
Right.
CDFIs should be exempt from CRA as well.
Totally. Yeah, well, let's go there.
And minority
Let's go
banks.
there. Let's go there.
I'm going to let the feds get a chance to have a conversation about that, and then we're going to come
And
back
that's why
to
they tell him to be quiet.
I'm just waiting for the CRA discussion to finish so I can
Okay,
jump back in here.
so we're gonna table the CRA, and we're going to ask the feds what's on the horizon.
So here's a few things that we have coming up. One, at the Office of the Comptroller of the Currency, we are addressing racial equity by the launch of this new initiative called the Roundtable for Economic Access and Change. And this is a way that we're bringing together the institutions we supervise. Many of you know them as the household names such as JP Morgan and Wells Fargo and Bank of America and Citibank and PNC. But we're pairing them up with community organizations like the National Urban League and the NAACP and others to focus on how we can address innovative or present innovative solutions. Because one thing that we've talked about, we're tired of hearing about the issues and the problems. We can rehash them day in and day out. What are the solutions? And we don't need a one-size-fits-all, because sometimes when you create that one-size-fits-all, you miss a significant portion of our population and how we can serve them. So we're looking at what's a solution for the rural communities that have black farmers who need access to agricultural loans. What is the way that we can serve entrepreneurs in the cities? We know that collateral is a major challenge. And talking about some of the policies that have impacted, as you're all aware of, the appraisal disparities that have been recently recorded and documented, we're now pulled together some of the large institutions along with the National Urban League, and they're piloting an appraisal apprenticeship program where they can focus on hiring and diversifying the actual industry that has created some of the disparities. So that's just one example of something that's happening under the Project Reach initiative. We're also focused on identifying other areas as far as policy where we can fine-tune or allow some of the institutions that we're supervising certain provisions under the Equal Credit Opportunity Act, such as a special purpose credit program, whereas they can reduce the credit risk that is usually added on to the interest rates that are then presented to the actual communities that we're trying to serve in this type of initiative. So that's an example, because one of the things that we're finding when you talk about home ownership and that basis or foundation for any type of generational wealth within our community, and you reduce the valuation of that property, you're taking away capital and collateral that they could put into becoming entrepreneurs. And so we want to make sure that your foundational piece of wealth generation or wealth building is secured and protected and preserved, and then making sure that you get your fair value for that. So those are just some of the examples of what we're trying to do. But I'll have to take one step back into this whole thing about what's the biggest challenge. And everyone is well aware that home ownership is one of the key areas of what we need to have as far as becoming or having that foundational asset. But it takes me back to my class, my first business class when I was in undergrad. And I had this professor, and he was blind, but I didn't realize how much foresight he had. His first statement when we walked into class after he took roll, the black community loses an acre of land every day. Mm-hmm. And I didn't get that. But we've got to get away from the mindset that residential real estate is a burden. We've got to get away from the mindset of selling our property to whoever the highest bidder is. Because if they're willing to pay a top dollar for that property, that means that there's value in it. Mm-hmm. And there isn't any new land that's being made anywhere. So real estate is a key component to how we can start this process, and then holding on to it is another part of it.
So you mentioned it. Did you want to add?
No. I think we're all Washingtonians here, too.
Yes, all native Washingtonians.
All native Washingtonians.
All right, so you mentioned it. Y'all mentioned it, what we've been losing.
Mm-hmm.
The number of businesses that we don't still have, the number of black banks that we don't still have, the amount of property that we don't still have. Any restorative policies coming out of the feds or out of the black banks or CDFIs? Because there's some loss that needs to be restored.
Yeah, and I think certainly when you look at what we are all doing, I think the work that we're trying to do is to look at those restorative practices. So I run a CDFI. This is a nonprofit. We're a nonprofit lender called Appalachian Community Capital. And people said, well, Don, are there black and brown people in Appalachia? There are. They absolutely are. I have met people who had black grandfathers who were coal miners. They said, Don, I'm a coal miner's daughter. But 20% of the population in Appalachia identifies people of color. So that means that there is an opportunity for us as a CDFI nonprofit lender to make sure, and we are a small business lender, to make sure that we are going deeper and farther into that region to make sure that black and brown businesses, but specifically black businesses, because I think there's not a lot of knowledge about the African Americans small business contingency in Appalachia, that those businesses are actually provided the kind of capital, affordable capital that we can provide, the type of business advisory services that we provide, and that our members provide as well. And so that is always at the top of my brain. How can we go deeper, farther into this region and make a difference? I also am the co-founder of an organization called the African American Alliance of CDFI CEOs. These are black executives who are the CEOs of CDFI loan funds all across the country. There are about 75 in this group, and we are committed to building capacity for those organizations, for those CDFIs that are supporting, serving black communities, building power. And that means to be strong advocates for public policies, but also looking at ways in which not just the government, I think you have to look at the private sector as well and say there is an opportunity here for the private sector to do even more than it has done in the past to make sure that these communities are growing and thriving.
Either one of you.
The National Bankers Association is the association for minority banks around the country. Most of the members are African American owned banks, and our mission and vision is to improve and create and increase wealth in our minority communities. And with the assistance of investments from larger banks, we're able to grow. The ESIP program has allowed us to help out quite a bit, but that's what we're here for. Industrial Bank, our mission literally is to make a difference in your life, and that implies helping you increase wealth. And as Andrew said, home ownership is key. I mean, that's where everybody in this room and everybody outside this room, we've got to start there, because that's where the average American builds wealth in their community. Absolutely. And it's funny you said that they're not making any more land. My father used to say the exact same thing. And I was like, oh, Dad. But he was absolutely right. It's the one commodity that there's a finite amount of, and therefore it's going to increase in value, particularly as the population of the world, of the United States, of cities increase as well. And then many people use their equity in their homes for small businesses, college, small businesses, and so forth. So that's real estate, not just residential, but it's key.
And it's so important, I think, to hold on to that land. My parents bought their one and only home in Northeast Washington off of Rhode Island Avenue in South Dakota. And my sister, my parents have passed, but my sister is still in that home. And we keep saying we need to hold on to this house that was built in 1914 with one bathroom. You all know what that was like. 6 of us in one house with one bathroom and 2 bedrooms, 2.5 bedrooms. But it's sitting on an acre and a half of land. And as we see our community, that block change just in the last few years, we were telling some of the siblings whose parents had passed away, don't sell your house, hold on to, and some were saying, oh, but they're giving us so much money, they're going to give us $200,000. Well, those $200,000 that they got, those houses were torn down, rebuilt, and now they're worth $800, $900,
Can I just echo that?
Yeah.
Please stop selling Big Mama's house.
Yes.
Stop selling it.
Say it again.
Just stop. Because you know what I see? Each sibling walks away with a couple $100,000, and in 3 and 5 years, it's gone. It's gone.
It's gone.
It's gone.
Gone.
Stop selling Big Mama's house.
Andrew, I'm going to give you a chance to talk about maybe some restorative stuff coming out of the Biden administration, maybe?
So, as I mentioned, we have the REACH initiative, which the roundtable that I spoke about earlier. But as far as other efforts that have been undertaken by the Biden administration, as many of you may have heard about the Economic Opportunity Coalition, which is something that was launched in the Department of Treasury. They've established a racial equity counselor position, which is now focused on creating or working on policies that have helped to exacerbate some of these issues of disparity and discrimination in the financial services arena. And so that's one effort that we know is underway. Another that you may or may not be aware of is that the Department of Commerce, under the Minority Business Development Agency, they are now focused on ensuring that minority business enterprises have the types of access and opportunities with the appropriations that are made for the infrastructure that is now being funded across the nation, and ensuring that those MBs get a chance to tap into the resources so that they're able to have viable businesses and become successful.
Perfect. So, got 15 minutes. I want at least 2 more questions in. We got started on this last night. Who are the players that we need to know about who actually have the power to help us dismantle structural racism in the financial industry?
Whoa. That's a good one. Let me just say this. We know that there is a disparity in lending. I mean, it's still documented. Even I think Fed did their latest study in 2020. So it still exists. One thing I don't think you can eliminate is unconscious bias. Mm-hmm. You know, when you take 2 applicants and they make the same amount of money, their credit scores is the same, and you have someone that doesn't look like us making that decision, there's unconscious bias. We all have it, but it does play itself out in finances. Obviously, black-owned banks don't have that kind of bias, number one. So I think there needs to be more support of our institutions. There's things we can do, there's things we cannot do. I think a lot of the large banks, particularly the big 4 that have invested in us, have made a lot of efforts to try to make that shift. But you know me, it always goes back to how we support each other and where we spend our money. Because if XYZ business is now getting more support from us, XYZ business can hire more people, create more jobs, build more wealth, and XYZ owner now looks like a different candidate when he goes to any bank. So I have a mad passion about us supporting us, because, you know, for us to spend away $1 trillion in someone else's community, it doesn't happen. And I'll give you an example of that, a nice little anecdote. There's about 140 minority banks in the country. There's only 20 black-owned banks. There's probably 50 or 60 Asian-owned banks and 40 Hispanic-owned banks. Mm-hmm. I mean, I don't mean to be offensive or anything, but Asians, I mean, they didn't really populate in this country until after World War II. We've been here for 400 years. Yeah. So what's the problem? And then you have 10 Asian banks. Now, I'm not knocking them, more power to them, and 10 Hispanic banks that are of the size that we could all, as black-owned banks, fit into.
Wow.
They have banks that they're just larger. I mean, they're huge, over $10 billion in assets. And we just had our first $1 billion bank like last year.
So who are we going to, Andrew?
Well, let me just say this, because last night the president asked me to bring it. So I'm going to bring it now. And this goes to Doyle's point. There was the skit on the Chappelle show years ago about reparations. And if you gave all of the black America was given reparations, they would put it all back into commerce. And they would spend it all, and they would have no wealth. And it was a joke, but it is very serious. And I started off with the targeted consumerism. We hear, and I have a 29-year-old daughter, always following Beyonce and Jay-Z. Nothing wrong with that. But you don't have to buy the things that Beyonce wears. Beyonce's giving that stuff for free because she's marketing for that company. You're spending all of your hard-earned money to do that. It's not, we've got to get out of this mindset of we've got to look successful because people like Bill Gates, they were sitting around with sweater vests and regular old shirts from, like, probably Walmart, not caring about what the label said. We've got to get away from focusing on the label and focusing on what is substantive, what we can build on.
So I hear a very clear message of cooperative economics, which has always been in our DNA, and that is the solution starts with us.
No question.
But there are still folks that actually control the purse strings, control the policies. So, Madam Donna, who are we putting pressure on? Besides ourselves, who are we putting pressure on?
It's got to be everybody, Kimberly. I mean, it has to be, again, it has to be both the public sector and the private sector. It has to be us as part of a community. You see something coming out of EPA right now, and I think we have to think about this, not just about economic justice, but social justice, environmental justice. So you've got a program that's coming out of the Environmental Protection Agency right now of $27 billion. And of that, there is a initiative called Justice 40 Initiative. The government is now saying 40% of those investments have to go into disadvantaged communities. They're saying it publicly. They're monitoring that to make sure that it happens. On the other side, you've got organizations that said, okay, 40%, we heard you. We want to make sure we're at the table. And that we are the ones that are advocating to make sure that that 40% is actually going into our communities, that the people we look like the people in the community, that we are actually receiving those funds because we are the trusted partners in those communities. These are the folks, I mean, Doyle goes to church where my sister goes. She sees him when she goes to church on Sunday. He is part of the community. And so you have to have those trusted partners that are actually dispersing those funds. And I think to keep the pressure on the government, but also keep the pressure on corporations, keep the pressure on foundations. There are some that are doing very good work, very committed. Others, frankly, have made the commitment after George Floyd was murdered, and I haven't seen them since. They said, we're going to make these commitments, we're racial equity, power to the people. And where are they today? They've retreated. And I think we have to just continue to remind those folks that what we are needing in this community, not only the work that we do ourselves, but it will take long-term capital over a long period of time. You cannot come into a community and say, we're going to drop a few dollars here, see you in 2 or 3 years, thank you very much, good luck, and leave. I mean, it has to be a long-term commitment.
And to Donna's point, using data, I think you have to keep the pressure on everybody, number one. But using data, if you've got poor communities, then there needs to be policies that benefit those specific communities. If you've got a poor group of people, then you need policies that help to lift up that group of people. The fence is only as strong as its weakest link. And Citibank did a study that said because of, discrimination, it's cost our overall economy, trillions of dollars over time. So, it doesn't benefit anyone, economically. We all get rich as the weaker link gets more wealthy.
Well, let's stay on that for a little bit, because we are going to do, especially the Greater Washington Urban League, is going to do everything it can to make sure that Industrial Bank continues to expand and all of our Black-owned CDFIs continue to expand. But we still have a number of major money center banks that drive the economy, that drive lending. What's your recommendation? What is your advice to our wonderful friends at Chase or Wells Fargo or Citibank or Bank of America? They're pouring in millions, billions of dollars. Are they getting it right?
Well, let me say this, because we had investments from Citi, Bank of America, Wells, and JP Morgan Chase. I think it's relationships. We've made a lot of progress getting to know these institutions, and it's a long road because they speak a different language than we speak. But it's working. We had a MDI summit at Citi last week, and the commitment that they had from senior executive management was just phenomenal. I mean, it was almost tear jerking. The folks up there that were willing to sit and listen to what our needs are. And I think each of those 4 banks, and I'm sure there's others, would do that too. I think we've got to find the right avenue, like the Urban League has to find the right avenue. How do we connect with these institutions? And I think there's enough listening ears now, and it's still taking time because, because we had an interesting conversation at lunch when we were up there, and 2 white executives that were at the table, they got an aha moment, and it was really interesting.
And just to kind of pick up off of where Doyle was talking about the relationships, that's part of what we've done with our Project Reach. It's how do we create the relationships, facilitate the relationships between minority or communities of color leadership, so that they're understanding and hearing the stories. And part of this has really helped them to understand their challenges. When we talk about credit worthiness, there have been institutions that have all started to, and Doyle kind of spoke to this as well, they're now sharing data so that the credit ratings and the credit bureau scores are being viewed in a new way. And it's combined with deposit accounts transactions. So they're looking at how you are managing your account and using that as a waterfall to then extend a new way of offering you credit so that you're able to purchase a home or you're able to start a business. So I think the conversation has started. It's not something we're going to be able to change overnight, but they are now seeing the value, and that's what I feel like we have to do. We have to show the economic, or build the economic respect, so that it can then lead to the social respect that we deserve.
I think that was a drop the mic, but you were still on the hook. Advice to the banks.
I was at a conference last week, I think, Kimberly, in New York. Mark Morial spoke at the conference, and he said, I love the saying that a rising tide lifts all boats, but everybody has to have a boat. So you can't, the tide can't rise unless everybody has a boat.
That's a good point.
And we have to make sure that everybody has a boat. And so, again, I think that it is incumbent upon us to look at not only what we can do as it relates to economic justice, social justice, and environmental justice. I mean, when I look at environmental justice, people say, oh, do black communities even really care about that? Well, when you see that 70% of the contaminated waste in this country is located near low-income communities, predominantly black communities, when you see that communities, are within 1 mile of the 237 or 327, however many Superfund sites there are.
Michigan.
And those are low-income minority communities. We all have a responsibility to make sure that change happens. And I think unless we cannot sit back, to Andrew's point, we can look good, we can put on, nice shoes and hats and coats. But at the end of the day, it really is about where do we want our legacy to be in terms of supporting our community and supporting our families, our friends, our associates, everybody in our community to move forward in this country. And we have a great responsibility to do that. We cannot sit back and wait for somebody to do it for us.
Again, our solution is in our hands, it's in our grips. We just have a few more minutes. How are we going to measure, and this is the thing that really gets me, how do we measure progress? What is the one statistic, one KPI, whatever you want to use, that we're going to use as a black community to determine our progress and how much we're making?
Well, I'll start us off at home ownership, as we've talked about.
Yes.
We've got to see that number grow.
Yes.
And right now we are seeing that affordable home ownership is becoming more and more unattainable. So that is the one measure that I think we have to kind of hone in on, as far as being something that will help to show the economic growth and mobility for our community.
I would agree, Andrew. I think when you see the gap, I think it's 42% of black homeowners compared to 73% of white homeowners in this country. We're back to where we were even before the Fair Housing Act was enacted in the 60s, that gap you have to see some movement in that gap in terms of home ownership and also in small businesses. We lost about 40% of black businesses during the pandemic. There's been some recovery, but we don't know how long that recovery will last because a lot of that infusion that came as a result of government programs. So, are those small businesses just hanging by their thread, or are they really growing? We need to really look at what that looks like in terms of annual revenue, all the metrics that come with identifying small business growth as well.
I agree with Andrew. The home ownership gap is key, but since we are at the bottom of every gap in the country, whether it's health or wealth or income or justice, I think you could have a dashboard. I would love to see Kellogg Business School go back and see if from 2008, 2009, have we gone from 3% to 4% spending? It would be nice to have a dashboard to follow a lot of them, but I think the easiest probably to obtain is home ownership. Oh, and let me say something about selling Big Mama's house. Only sell it if you're going to put that money in an appreciating asset or an income producing asset. So I don't want to say never sell it, but don't go blow it.
Yeah.
I want to thank you guys. You are big giants, and you're accessible big giants, which makes it even that much more of an honor. And we have much respect. And the Greater Washington Urban League wants to make sure that we can call on you again to help our Black community understand where our power is, how to use it, and how to measure our progress. So I appreciate that you guys actually, politicians that you are, actually went to, we have the power that's within. Even though we need to hold everybody accountable, from the Biden administration to our money center banks to our other private sector, but the power's within. Thank you.
Thank you.
So this is an issue for the highest importance for the Black community. And the sage advice that you guys have all given here will go a long way to help solve this issue.